Chuck Malamut will be joining us in just a moment. It's 5 minutes past the hour every Tuesday morning in the 8 o'clock hour. All about your financial matters with Chuck Malamut. He's been with us from the very first Hurley broadcast more than 25 years ago as our official financial advisor. In fact, he was our first client 25 plus years ago. Chuck is the managing director. He leads his team, the Malamut Group, at Morgan Stanley's Northfield, New Jersey office. You can reach Chuck and his team at 609-383-2010 for all of your financial planning needs. And this program is presented by Chuck, who is a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation with Chuck is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. And I take this opportunity to let any listeners who don't know, and those who do, you just get to hear me brag about Chuck, one more time. Our congratulations to Chuck for being one of the few in all of America when you think about how many people are in the financial services industry. That's why I spent a lot of money for a very expensive plaque on the office wall that Kirk Conover is pointing at right now. Kirk, you would agree. I mean, that's got grommets in there, and everything. Exactly. It's got a fancy trim around it. Yeah, it's just stunning. Stunning. Turn a letter over, Kirk. Vanaway, turn a letter over. Chuck Malamut, 2017 Barron's Top 1,200 in all of America, top 40 in the Garden State of all financial advisors. It's an impressive feat. Most never see it once in their entire career. Chuck has had it multiple times. Chuck, welcome to the program. And you also were brought into the very special brotherhood of having advance notice of Operation Tiffany.
Harry, Kirk, good morning. I'd be remiss if I wasn't, I laughed, I cried, I watched, I listened. Yeah, it was remarkable. And Harry, what was so simply amazing is that you were able to reel from a prediction you made earlier in the day on Friday that unfortunately I haven't heard. Is PK back? Is PK taking a leave of absence?
Right,
I haven't heard anything about.
There's two things
about PK here.
There's two things. Number one,
I've been thinking about this all weekend now.
I'm glad you're doing this. This is very good. First of all, Kirk, who created Pocket Kreskin, and he's not a stickler. He's very reasonable and he's very fair, but he insists PK is not allowed. You have to say Pocket Kreskin.
So Pocket Kreskin. The score is now 2-1. So
2-0 and an incomplete.
Oh, that's not even close. No.
They didn't have the vote. It's incomplete.
I'm going to have to go back and look at what you actually. Can I get the show?
No. Here's
the retake on the show.
I will confess that I said that I believe that when push comes to shove, the president has twisted enough arms and things we don't really know about that haven't been made public, such as promising primary challenges against Republicans who vote against it and doing everything they could to whip the vote, that I did make a prediction that it would pass. However, in fairness to the truth, it didn't pass, but it didn't fail. The vote didn't take place, so I get a grade of incomplete. And we will live another day. When the first vote actually happens, that's when the grade comes in. Now, Kirk agrees with that, and not just because he's my pal and you're my antagonist, but he agrees because that is the truth. Now, Kirk, I can tell, Chuck is not buying this. He thinks this is spin. But in all fairness, they didn't vote, which means my prediction was not incorrect. My prediction is not yet ripe.
And I'm sure Kentucky. I'm sure Kentucky said they should have probably have won the game as well.
No, because that game, the full game was played. Time elapsed. They actually tied the game with 7.3 seconds left, and then. All
right. So
sadly,
look.
Kirk, even the great Chuck Malamut can be wrong once in his lifetime.
No, I've been wrong. No.
Well, that was my point to you earlier. It was not a defeat.
Exactly.
But it was
the vote never occurred.
So it was not a victory.
I didn't say it was a victory.
All right, so I'll go 2
2-0-1. It's not even. It should be just 2-0.
But how long do you get to get the 0-1 for the two? How long do you? It took forever.
Not forever, but it took Obama over 2 years to get to get a vote,
Right.
and then they did it on Christmas Eve.
So I will get together with Kirk, and I'm sure
Kirk,
we will come up with a couple
agree?
to get the score.
Pocket Kreskin.
No.
Pocket Kreskin.
No.
Still lives.
Still.
Well, no, but you survive another day. And I guess your bracket is still intact too, right?
I didn't do a bracket because I worked too hard.
I had Kentucky.
I worked too hard. Well, I was so excited when Kentucky got.
What a final 16 seconds.
They were down 6 points, and I didn't give up. And then they tied it, but I was a little afraid of how much time they left. Let me credit the North Carolina coach, though, because the smartest thing he did was not taking a timeout. They had 7.3 seconds. And Roy Williams is his name. I couldn't think of it for a second. He let them just go, and
that's when you get open.
And that's how you do it. You don't let the defense have a chance to set.
Yeah.
And that was an incredible game, incredible comeback. Kentucky broke their heart a few years ago, and they returned the favor.
Yeah, I always loved chaos basketball.
How about
listen,
guys?
Open.
How about until North Carolina got into the tournament? The Final Four of the first three, the veteran of the group was Oregon, that hadn't been in a Final Four in like 82 years, but it wasn't even the Final Four. There was only like 8 teams in the tournament then.
Oregon won the very first Final Four in 1939.
Right, there were like 8 or 12
and they've never
teams.
been back since.
Right, and they're the veteran of the Final Four before we got to the Kentucky and the North Carolina game.
Well, Harry, I guess what we'll do is Kirk will stick around the next break, and you guys will tie me up in the closet. You
remember like the Bones fraternity back in the day?
The Bones fraternity.
When we go to the break, you're going to get put into the locker.
No.
Then we're going to throw the tar on you and the feathers, but it's going to have all that red and blue and all those different colors. You ever see those guys walking down the street, Kirk?
No.
Because you were offshore guy, we were onshore guys.
DHS.
You would see people literally; they were tarred and feathered.
Jeez,
it was terrible, and it was hard. That paint and the tar and the feathers. I mean, they were different colors, multi-rainbow colors, for like months until it would wear off. That's what we'll take a picture of it, Kirk. Yeah. We'll let you take your tie off because it's a handsome tie. We don't want to get the colors on the tie, but we're gonna go initiate him. During the break.
You know, Harry, you definitely are part of the media because you can spin a story. There's no doubt about it.
I told you he would say it spin, Kirk. Would a Wharton School graduate that loves me so much that he would lie for me, is that what we're saying here, Kirk?
Well, it's a conspiracy. They're absolutely, it's...
now he's got a tinfoil hat on, Kirk.
I'm going to go back to my text messages and see how... I'm sure I can discover where I know I can be correct.
No.
And, you're right, Harry. A broken clock is right twice a day, so... So congratulations. I guess
when you predict a victory, but the game's not played,
you don't get a loss.
You don't get a loss.
If the
don't get a win either.
Let's say it's a baseball game and the game ends because of the lights burn out or something, or a rain out. That you don't get a loss.
All right, Harry. Let's move on, okay? Because you and I are going to,
Pocket Kreskin lives.
Pocket Kreskin is taking a leave of absence temporarily.
He was going to say PK again. He was going to say PK.
All right, so let's get on to
important things.
You and I will go on the break, and we'll take care of all this. But so,
all right, Kirk, Chuck, the market update, please.
So, Harry, last week, as you know, because of the inability,
that's accurate. You can say the
failure of the vote taking place. Stocks, unfortunately, probably had their worst week of. Since the election. They were, the S&P was down 1.4%. And what's interesting about the media is they have a tendency now to focus, again on the negative. Dow Jones down 8 days in a row as an example. So when you take a look.
Isn't that a shame that that's done that way? Because the real story is, what is the difference from November 8th?
The difference is that $2.9 trillion of wealth has been created in the equity markets.
Why is that not? I know you don't get into politics, so this can't possibly be political. Why would that not be a story? Do you see regular stories about $2.9 trillion?
No, of course not. But here, so think about this for a second. All eyes, and a lot of this obviously driven by the media is on politics right now. But the reality is that for the last 2 quarters, we have had an increase of a momentum of more positive earnings. And, we are in that quiet period right now, Harry, where, companies can't really say much until they report. Quarter ends Friday. It'll take, middle of next week to get started to report earnings. And I think, all eyes at that point in time will be clearly on what the companies are reporting. And probably more importantly than what is being reported is what are the forward-looking statements? Like what are they saying with respect to business? What do we think will happen in the respective industry? Is it, whether it's healthcare, financials, industrials, materials, what are the themes that are being said and created as a result? And I think the market's going to take its cue as a result of that. And, we've been through times like this, and so right now we're focusing on what's happening in Washington. And I thought about this as we spent some time together last Tuesday, and we chatted about geopolitical risks. And that was one of the items that could derail the markets. And unfortunately, lo and behold, as it turned out on Friday, we saw it firsthand. And again, remember, we've heard this before. You are now watching on television and through the media, whether it's print, radio, television, internet. You're seeing sausage being made in Washington, and it's really a sad state of affairs. And if you're not disgusted by it, you should be, because you think about the fact that we have elected these officials to do their jobs, and whether with the Republicans or if Trump wants to go to the right, he should probably say he wants to go to the left. In whatever his endeavors are, and maybe there's chances then that sort of the opposite, the contrarian. If he wants to, he wants certain things done in healthcare, he should go the other way, and perhaps he can then get them done. I don't know. Am I totally crazy in making that statement?
Well, listen, I'm a big believer in your contrarian theory. I was slow to the party, but contrarian, there's a lot to that. How detrimental to the markets is this? A blip? Or the fact that healthcare and the other stuff was just all tongue-in-cheek and fun, but the seriousness of your show is the failure to pass this, because there's no question. I'm not playing funny with that. The failure to pass this, there is,
there's implications.
Yeah, well said. So are they momentary, or, like, for example, if they pivot strong and get a serious discussion going about tax cuts, for example, markets will love that, don't you think?
Yeah. So let's think about this for a second. Again, this is not a political show. We always say that, but in what we do, it does revolve around politics. And unfortunately, I think what happened was, President Trump used a lot of political capital and was probably, pretty misguided, throughout the process to, where they hung him out to dry. So now you think about,
you never call for a vote that you don't have the votes.
Right. So now, healthcare obviously, and I've heard a number of, you probably know better, but I heard there was a 19% of the vote was going to go that way. I mean, it was very, very low. And I can't imagine for a moment that Ryan didn't know this was happening.
Well, here's what happened. You have a conservative group. They're called the Freedom Caucus. So they're in the neighborhood of 30 people, let's say. A couple of them came on board late, Ted Poe, and a couple. He actually left the Freedom Caucus over this because he thought this was ridiculous. He brought out the Reagan rule. If you agree with somebody 80% of the time, you don't fight over the 20%. So what I think Ryan thought, and he conveyed to the president, I'll get you the votes, Mr. President. We only need 216. We don't even need 218. We'll get it done. We'll whip what we have to do, and we will get to 216, and we will pass this. And it was, everybody's forgetting the fact, because we never got there, this was going to be very difficult in the Senate. The Senate was not going to approve this bill, so the Senate would have maybe been able to approve a different bill. It would have had to have been reconciled. It would have been a stinky bill to begin with. So you were right in your assessment. It was a very astute assessment, Chuck, that the president was disserved because Ryan telling him he's going to get the votes means he's going to go out there now and because there were some media reports that the president really wasn't all in, and that maybe he's, concerned that it won't pass. He then had to get, definitive and unambiguous and say he's all in, and all the things he did with the speeches that he did and members that he met with. Then what happened was, oops, we're not going to get to 216 unless we please these 24 to 30 people. They started to change the bill. Then guess what happened, Chuck? Then they lost moderates. So this became, if you please them, you upset the other ones you already had. Now you no longer have them. And it became an absolute disaster that had no chance of passing.
So now, as you move on, you take a look. And again, we never like to talk about daily actions in the market, but Friday itself was sort of a nothing day at the end. We were down ever so slightly, but nothing big. Over the weekend, I guess it began to set in that there are issues here, geopolitically speaking, here in the U.S. and the international markets had a really tough time of it. Starting in the Far East and moving into Europe and ultimately into the U.S. And at one point in time, the Dow was down over 184 points. And it fought its way back. The market fought its way back to be down ever so slightly at the end of the day. And actually, the NASDAQ was up. So you have to view that, in a positive light. But, and again, we can't, Harry, what we don't want to do is look at what's happening day to day. But unfortunately, where we're at now, because there's nothing else to report. I mean, if you look, you might see one or two companies come with earnings because of the calendars that they're on, and they're not not that they're not big companies per se. They're not going to move the market. So,
and the deal is, it serves you well to not go day by day because you're dealing with investors that are investing for long periods of time, for a lifetime. You would have absolutely
gotten whipsawed yesterday.
Yeah,
there's no doubt about it because your emotions would have taken control because we had several calls in the morning where you could sense and the panic in the voice of the client, and now you have to say, hey, listen, just kind of take a step back here. I mean, this is not a sprint. This is a marathon, and we've been doing this together for 20 plus, 30 plus years, and we're not always going to be right. But chances are, we have the intuition to, and the gut instincts to be able to hopefully separate right from wrong.
Is it human nature that obviously nobody was complaining from November 8th until a couple weeks ago?
No, actually, no. Not to cut you off, they were. Because here was, it's just incredible sometimes because, I cut you off, I apologize, no, PK, but what happened, Pocket Crescent. So what happened was, the market goes on a big move. And year over year, so the S&P's up maybe, every day changes. Let's say it's up 20% year over year. Because remember last January.
Why aren't I up 20%?
Well, I'm up,
Yeah, you might be up 12.
Exactly. Yeah. And then it all goes back to, and the first thing that we do, Mike and I typically do, is we go pull out the most recent in real life view, retirement analysis, and we look at what is your probability of success of achieving your goals. So, Harry, if you have a 93% probability of success, and we're using historical rate of return of 7 as an example based on a balanced account, yeah, we could take your portfolio which is balanced. Maybe it's 60% equities, 30% fixed, and 10% cash, and we could change that. But unfortunately, when the market turns, and it will, you will have a correction. And the questions are we in a?
I mean, it's fair to say you don't base your decisions on a hot 3 or 4 month period. You're basing it long term, and this is why your what I call perfected concept of total asset management with the all important asset allocation is built for the long haul.
Harry, you're absolutely correct because the last thing you want to do is have another discussion when you're down 20%.
Right.
And what did you in fact accomplish, by doing that? I mean, if your risk tolerance is for what I'll call a moderate investor, there's no reason for you to have an aggressive portfolio unless you clearly cannot get your goals accomplished.
Yeah. We're way late for our first break. We're going to come right back. He is Chuck Malamut, the official financial advisor for the Hurley in the Morning program. 609-383-2010 for all of your financial planning needs. When we come back, Chuck is going to talk about the status of infrastructure spending, because there has always been a belief that candidate Trump becoming President Trump, because obviously he's a developer, he's a builder, and he sees that everything from our roads to our bridges, are basically crumbling through lack of, upkeep. And obviously the wall as well. Who's going to pay for it now? And all of that. So we'll talk about infrastructure spending with Chuck Malamut when we come back in 3 minutes. With the official financial advisor to the Hurley in the Morning program, very happy to say Chuck is going to do overtime. He's going to go all the way. Usually we end at 8:45. Chuck's going to go all the way to the top of the hour. Please continue, Chuck.
Yeah, Harry, we got certainly misdirected, and I got off my game early on when I was tag teamed by you and Kirk. But anyway, so let's, before we go to infrastructure, if we could, we really didn't cover, you asked a question on a go-forward basis. What do you think will happen because the health care, we'll call it a setback. We're not going to call it a defeat. How's that at this point in time? Because the vote wasn't taken.
Exactly.
All right.
You mean
I am being very kind, because I know you had a very tough weekend in taking care of Margie. You did a fabulous job on the renovation.
So you're giving me a concession. You don't really.
No, I'm not going to give you. I'll give you an attaboy, but I'm not going to give you a concession because it's still 2-1. But we'll leave it. So you say it's 2-1. I say it's 2-1. But it's a marathon.
But I'm not even. I'm changing mine. It's not even 2-0-1 because one is like a tie. I'm 2-0, and this hasn't happened yet. But go ahead.
All right. So listen. Let's talk about healthcare for a second.
Please.
So because it did not happen, the vote did not take place. It could signal some additional problems, with respect to the political capital that the President Trump, used here. So, the key issue is Trump going to encounter additional problems, with tax reform, because they're immediately moving now on the tax reform, and that issue, Harry, if it's got to be as complicated, if not more complicated, than what we saw with healthcare. So we're pretty certain that some sort of tax bill is going to be passed. Obviously we have no idea what it's going to look like at this point in time. Now, if the political turmoil that we're witnessing it continues onward, then you have higher risks along the way, and certain parts of the market, cyclical areas of the market, are going to come under some pressure. Now, I find it pretty interesting, Harry, that during all this, as an example, yesterday the NASDAQ, technology-laden type companies, fared okay, or they were positive for the day, and some of your cyclical type companies, had a pretty tough time of it. So, which kind of takes us right into infrastructure. It's painfully obvious, and wherever you go. And I had gone yesterday afternoon, Harry, to Westchester, PA, to visit with a client, and the road conditions are atrocious. I don't care where you go. You got to have your eyes right on the road to avoid getting into these potholes, which are, unfortunately, they're all over the place. So, President Trump has talked a lot about additional spending. But, Harry, have you seen any plans, that they put forth at this point in time with respect to infrastructure?
No.
Okay.
But they're talking that there's going to be a lot. Well, let's put it this way, Chuck. We have 3 different estimates for the cost of the wall. They're actually bidding right now for companies interested in building the wall. That's obviously an enormous, I think that qualifies as infrastructure big time. And then you're going to see, based on, I guess, when they finally reveal the plan, how much federal dollars are going to be made available. Because, look, I mean, at some point, if we don't fix these bridges, we're going to have some horrible collapse or something. Yeah,
so, what we're seeing, Harry, is that at this point in time, and it's within the Republican Party, actually, there's going to be a number of Republicans that are going to be not inclined to support more infrastructure initiatives right now, Harry, unless you see some spending offsets. So, what came first, the chicken or the egg? And I think it's very, very important that, that we do the infrastructure, the airports, the tunnels, the bridges. It just goes on and on and on. I don't care where you go. We have an infrastructure that needs a tremendous amount of work. So, investors might be a little too optimistic at this point in time about, what is going to be done and how it's going to be done. And the one thing that we want to avoid, obviously, on the back end is disappointment. But, we're not going to know that, Harry, until, again, these initiatives are announced and the plan, here's our plan, here's what we want to do, here's what we're going to need to spend to do this, and here's how we're going to pay for it. So, again, so the market, you think about, we made from the election up until the other day, we're up about 12%. And so now, the market, I think, is taking a little bit of a breather here from a technical point of view in an effort to move onward and upward. Now, I don't think, the next 5, 8, 10, 12% as an example, and, it will be there. I don't know how long it's going to take. It's probably going to take some time. I don't think it's going to be certainly as easy to get accomplished as what we just went through. And as a result of that, I think,
wow.
I think investors are going to be, and again, it goes back, you didn't get the phone calls or any sort of communication on the way up. So the problem is you need to be positioned again for these setbacks.
Yeah.
I mean, and yesterday could have turned into a major setback, but the market again, which was very good, the market responded as we got to the end of the day, and we were able to recover most of the losses there.
Chuck, we have to get our bottom of the hour break in. Now we're only 5 minutes late because we went so long in the first segment, but you're here for 2 more segments till the top of the hour. Here's what I think happens in this age of Trump, if you will. Even though the vote didn't go the way markets were hoping, and so there was some retreat to an extent, but not nearly what it could have been, I think there's a belief that tax cuts are going to happen, that infrastructure and reinvestment are going to happen, that jobs are going to continue to increase, and that ultimately, because everybody knows, even the last administration would admit it, that the current healthcare system is unsustainable. So there's no way this can be ignored. It's going to have to be dealt with. I think the market sort of gave a do-over that, we took a chip out of you, just a little whack at you, but we believe you will come back because you have to come back. And I may be overthinking the House, Chuck, but I really do believe that all these reasonable assumptions created a more mild event financially than otherwise it would have been.
I don't disagree with you on that, Harry. What the comment that I will make is that I think because of the amount of coverage that we're now seeing with this, it's overshadowing really what's happening. And again, not to be repetitive, it's corporate earnings. And in a matter of 2 weeks, we're going to know very, very quickly if financials, if small caps, the areas of the market, oil related stocks, how did they fare over the last quarter, and what are they predicting will happen as they get to the latter part of this year? I think that is really most important from an investor's perspective versus everything that we're watching and seeing and hearing with respect to what's going on in Washington.
We're going to take a brief time out. Coming back, more with the official financial advisor to Hurley in the Morning. Much more straight ahead. If Chuck isn't done with infrastructure spending, there'll be more time on that. We'll talk about the market internals. Some think, maybe is there a correction that's due? Chuck will talk about that, and then we'll get into U.S. versus non-U.S. equities, all in the remaining 23 minutes straight ahead. As I mentioned, this portion of our program is also brought to us by Resorts Casino Hotel Atlantic City, second in the spot break, because we're going to tease this incredible thing that's going to be starting on Monday, which is your opportunity to participate in Harry Hurley's $2K a day giveaway. In a financial program, that's certainly music to Chuck's ears, I'm sure. in terms of two opportunities that you have a chance to win $1,000 twice a day. The Fancy Fox News announcer will explain it in just a moment. On the other side of the break, right before we go to Chuck, we will share with you the latest things that are happening entertainment-wise at Resorts Casino Hotel in Atlantic City. We'll be back. More with Chuck Malamut, Your Financial Matters, in just a few minutes. As I mentioned, this portion of our program, Early in the Morning, brought to us in part by Resorts Casino Hotel Atlantic City. And there's some fantastic entertainment that's happening in April. Let me share with you the American Rush Tribute Lotusland, Saturday, April 22nd. It truly promises to be an unparalleled performance. So if you're a Rush fan, you will love it. The diehard Rush fans, the musicians, casual music listeners alike, Lotusland, the experience, it's really a heralded experience. Tickets are on sale right now, $35 and $25 at Ticketmaster.com. This will be another incredible performance in the iconic Superstar Theater at Resorts Casino Hotel Atlantic City. One last April item I want to plug, because this is going to be really, this is great for people that love history, for people that were around at the time, or if you're the son or daughter of parents that, went to the 500 Club when the genius Paul Skinny D'Amato ran it, and just such an entertainment, innovator. The 500 Club Revisited. It will feature Dave Damiani, Haley Reinhart. These are famous people from some of the most successful talent shows on television. Landau Murphy Jr., No Vacancy 17-piece orchestra. Tickets on sale at Ticketmaster.com for Saturday, April 29th. The 500 Club. $45, $35, and $25 tickets are available at Ticketmaster.com. It's all happening at the Boardwalk at North Carolina Avenue, Resorts Casino Hotel, Atlantic City. Chuck.
Harry, let me plug Resorts for a second,
yeah.
if we could. I have a good client with his wife in yesterday morning doing the review, and he said they went to the Sunday brunch with some friends, and I think it was $45. He goes, absolutely fantastic. So money, very well spent. So just kind of, throw that out to your listeners if they want to put $45 to good use. I think that they should certainly take a look at that Sunday brunch. So let's talk about the market here, the dynamics of where we're going. As I mentioned to you before, you take a look at what has happened from the beginning of the year, from the time of the election. So you've had certain parts of the market, small caps, financials, energy. They have gone through. We've had a little bit of a rotation here. They have, in fact, given back a lot of the gains from the shortly after the election. So, as you kind of look at the internals of the market, you're saying, okay, those particular dynamics that are now happening or have happened, could that, on a go-forward basis, create some issues for the overall market? So, look, you have globally speaking, because we focus so much here on the U.S., there was absolutely no coverage last week, Harry, of what happened in London. You think about it for a minute.
Do you agree there's just not, because of all these other things, there's an appetite right now, and again, your show's not political, but the financial sector intersects with geopolitical realities, and you know this, and you talk about it on your show all the time. I believe right now in the American media, they are on a Russia fixation. They're on a fixation with this House Intelligence Committee. They're on a fixation with the chairman of the committee, that he went to the White House, that he found these other things that they want to discredit, that they're huckstering the one story for all it's worth, and that there's just no room in any of the newscasts. They take all the air out of the balloon, basically.
Right. So think about this for a second. So no coverage whatsoever, and there should be, because I think it's obviously it's important. It's not just what's happening here; it's happening overseas. But if you look at the equities, we still remain very Harry, I don't want you to think, and your listeners to think, that we're negative on equities. We're not in any way, shape, or form. What we're trying to do is to make absolutely certain that your listeners and our clients understand that the road might be a little rocky here, on a go-forward basis, at least on an interim basis. So you think about how resilient most of the market has been over the last several months. But you've had, certain areas, higher risk assets, small caps, cyclicals, high yield credit. I mean, they have not performed well. And as a result of that, are they in fact signaling, Harry, that on a go-forward basis that, is the rest of the market, does the rest of the market need to be concerned about that? And again, I think that a lot of this is going to be dependent on what we're going to see over the next several weeks.
Here's why I'm so impressed with you, Chuck, for all these years, because think about it. Trump winning the presidency when no one really believed. I did, as you know, and I went on a limb and wrote about it and spoke about it, but nobody really believed in the mass homogenized media and so on that they gave him no chance. It wasn't like he couldn't win. They didn't even give him a chance that he could upset and win. Who would have believed that in 3 or 4 months the country would have generated $3 trillion, instantly have in the first full month a very, very healthy jobs report. So you really, in your world, you never know what's coming next.
Harry, the interesting thing about our world is that you never ever know. You can make
because all the market research you guys were receiving, the markets were planning for a Hillary Clinton presidency. True or false?
True,
without a doubt, and they left no chance. So all of a sudden, what happened? What next? And then, I don't know, maybe the contrarian again theory. People would then think, oh, my God, somebody with no experience, we're going to have a really bad rocky patch, and boom, like booster rockets, the economy is taking off. You just can't imagine what's going to happen next.
I think what's interesting here, Harry, is that, we've talked about this microcosm that we live in here, and obviously, a lot of foreclosures, a lot of properties for sale, high unemployment. So you can't, if you're not depressed, you need to be depressed because you're thinking about driving around, thinking about the real estate that you own, what the valuation has been created as a result of what has happened. But when you get outside of this area and you think about this for a second, what was the worst performing housing market 5 to 7 years ago? Las Vegas.
Nevada. They got crushed.
Okay, so now
they came back though.
Las Vegas, Tampa, Florida. I mean, these were areas where you had significant foreclosures, high unemployment. So
Arizona also got crushed.
So they've resurrected themselves. So think about that for a second.
I don't expect you to be the real estate guru, but has Las Vegas come all the way back?
No,
but
it's close.
They've come a far way back.
I think they're within 10%.
Wow. That's amazing.
But I think the point I was trying to make, Harry, is
after the break, Chuck's going to make the point. It's a cliffhanger because we have 10 minutes left in the hour. We've got about a 4-minute break. We'll have 6 minutes uninterrupted with the official. I'm glad we have him on overtime today. The official financial advisor for the Hurley in the Morning program, Chuck Malamut. For all of your financial planning needs, give Chuck and his great team, the Malamut Group, a call, 609-383-2010. Thank you very much. 54 minutes past the hour. Chuck, we had a cliffhanger, but just take it away anywhere that you'd like to conclude your program. We have about 6 minutes uninterrupted.
Well, I think, Harry, what I wanted to say was the fact that outside of where we live, you're starting to continue to see this economic momentum, and the fact that consumer confidence and consumer spending, continues to escalate, which obviously is great, for the economy. So if we're able to implement some sort of tax reform that will benefit consumers, that obviously is going to be helpful.
Don't you think, Chuck, with having the failure, now Pocket Kreskin aside, it was a failure to not pass it. They shouldn't have brought it up for a vote if they couldn't pass it, but that's a failure, and they're getting clubbed with it daily. I mean, every news cycle. Now the president has pivoted and said, we'll come back to that someday, but we're going to do tax reform now, and I wish I would have done tax reform first. But in all fairness, a big part of doing the proper tax reform, Chuck, was fixing the health care. because that is linked to it.
Absolutely.
So now they don't have that fixed, and now
I
they're
mean,
going to do
you
tax
think
cuts.
about it, it's like 1/6 of the economy.
Yeah.
And
it's big.
so it had to get done correctly. As you mentioned before, that the bill changed dramatically, and then it became, I guess the best word, unvotable.
That's true.
For all the for
That's the best way I've heard it said yet.
I think so.
You heard, Chuck, this is interesting. You heard a rumble, didn't you?
I did.
And I did too. And there's nothing above us. We're on the top floor. I think we had some kind of either lightning event, because we are now out on 104.1 FM. I'm going to send a text message to Tom McNally.
It sounds like it's pouring out there.
And it probably is. Let me take a peek. And it is. It's dark and it's pouring. So anyhow, we got knocked off on the FM. So if you're listening online, you're not affected. And if you're on AM, you're not affected. The only people that are hearing me saying we're off are people that can't hear me anyhow. But the FM went out. Tom McNally's on it. Let your heart not be troubled. Back to you, Chuck.
All right. So, Harry, we've spent the last several years, we've talked a lot about, U.S. versus international equities. And I think what we're seeing here is we're starting to see a transition where into more non-U.S. equity markets, performing better than what we're seeing here domestically. So, we have outperformed, U.S. equities have outperformed international. It seems like, Harry, for years. It's just, I don't know the number, but there's been a lot. But we think that we're starting to see that trend change. As non-U.S. economic and earnings growth improves, and I'm going to take this one on the chin because I'm surprised Pocket Kreskin did not mention Brexit. But we'll take that.
I'm your brother.
We'll put that aside for a second.
Make you look good.
The leadership could be ever so slightly changing, Harry.
Wow.
We're starting to see, positive performance in other markets, particularly if you look at emerging markets. This year going into yesterday was up almost 13%, by far the winner. The DAX index in Germany, it was up 7.6%. The Euro Stoxx is up 7.6%. So I think that it would be remiss if you did not look outside the U.S. when it comes to investing with the equity portion of your account.
To listeners that are still hearing our signal, a lot of listeners are now reaching out to me in writing and sharing that the power has been going off and on. This thunderstorm has really hit the metro market hard. Some of our platforms, and I'm just giving Chris Coleman and Tom McNally word, I don't know if it's 104.1 FM, if it's a stream, but we're just going to keep going like we're on all of our platforms as always. Chuck, back to you.
So Harry, we talked about the potential of a setback here. Don't be at all surprised, but we're not. I think from a long-term perspective, I think the bull market still is intact here. And if are you better off buying equities or fixed income? I would stay on the path that we've been doing for years now. It seems to work.
Is the glass half full or half empty right now in America?
Well, Harry, the glass is definitely half full.
Yeah.
No doubt about it.
And really beyond.
I think for sure.
What do you think of the first quarter? We only have 30 seconds. It's only a couple days from now.
Look, I'm not going to make a prediction, but everything I'm hearing, I think that you're going to have a decent quarter. And
what I'm excited to see, Chuck? I'm excited to see the first – it's not a full quarter because the president didn't take office until January 20th at 12 noon, but the first basic quarter, it's going to be interesting to see GDP and everything.
Yeah, I'm most interested in the financials.
Yeah, I agree.
Because they drive – they really will help drive the market.
Well, there's only a couple days. I mean, we're talking about less than 3 days.
Well, you have 3 days,
yeah.
And then it takes, I think a week after, 10 days after, you'll start to get those earnings, and hopefully we can then focus on what's really important.
Chuck, thank you. Till next week.
Thanks for having me, Harry.